Hey everyone, Happy New Year. Pardon the wall behind me. That's my 2-year-old being a 2-year-old. I'll take care of it later on, or I'll leave that on. But you know what? I just noticed it as I was making this video and I just saw it on the wall and I was like, okay, great. But anyways, one thing I wanted to do with my videos, I thought would be really cool, is to document my own journey. People document their weight loss journeys. People document their, journeys to build homes. I think there's another journey I'm on, and that journey is that of creating wealth for myself and my family. I personally have a goal of hitting $1 million in my portfolio of investments that I've done. So I thought of like documenting it. I know today was a tough day. Yesterday was a tough day in the market, but then I thought like, how about I just, go on creating a documentary of how the stock market has performed or is performing for me as I go along. And what happens? Do I hit $1 million mark or not? I think I've started off relatively well. But I think anybody who started off in the last 2 years has done quite well. You could have just taken a dart and thrown at any stock out there in the market, and you probably would make money. If you did not make money on a stock that you invested in the last 2 years, I think you were pretty unlucky. So there was a big crash that I went through, which was the COVID crash. But from what I realized is that COVID crash was very, very short-lived. And, the short-lived crash, I think, gets erased from your memory much faster than a painful downward trend or a bear market that persists for a long period of time. So all I want to do is I want to document how my portfolio does over a long period of time. And if I'm able to hit the $1 million mark that I think I should be able to hit. But again, I have learned a lot of things in this market over the last 2 years. And one of the biggest learning is anything is possible. Market can 2 times or 2x, and market can just totally become, half the value it was. So in my mind, consciously, I have made a decision that even though my portfolio, whatever it may read, if it reads $100,000, I'm only going to say that my portfolio is worth $60,000 or 60%. If you look at some of the worst crashes in the history, they range in that 40 to 50% range. And I've kind of said, okay, look, I'm going to take 40% as my crash. And I'm always in my mind going to think my portfolio is 40% less than what it really is. Just gives me comfort, just give me that sense of, allows me to not panic when things are not going right. But I'm also, I would like to say that I'm from a middle-class family who was an immigrant to Canada not too long ago. So I believe in, creating wealth and actually, going, just breaking or be the first for many things in my family. So again, $1 million portfolio, I think would be the first in my family. I just want to say this, that the portfolio, the money that I've invested in the stock market is absolutely that money that I will not need in the next 5 years. At least I pray to God, I hope I don't need this in the next 5 years. I actually do believe in luck, and sometimes luck can go against you and sometimes luck can go for you. And I think in my case, I've seen luck go both ways. So I would just say that, at least as of now, I don't think I need this money for the next 5 years. And therefore I can let it grow in the market and see where it goes. It may crash. I may lose a lot of money, but you know what? It's fine. So I basically, again, as I said, I started in 2019. I was a little bit scared. I did not want to put money into the stock market. I did not know how it worked. But after the realization that I don't have much saved for my retirement, I thought, I'm just going to start putting money into a Robinhood app. I thought that was the most intuitive app at the time. It's just easy to sort of, manage your investments there. And therefore I started it there. Will I migrate to another platform? Probably. But at this point in time, I have Robinhood. All the investments up to $500,000 are secured. Fair ways away from that mark. And, I'll go from there. Now, how has my journey been? I started as a dividend investor. I love dividends. Every time I get $1 or $2 or whatever it may be. Now I get a little bit more. I feel ecstatic. I feel so happy. It's like it hits all the dopamine centers in my brain. And I feel so happy that I am actually, somebody out there in these companies is working hard for me, and therefore I am getting a paycheck, however small it may be. Hopefully one day I can grow it to a much bigger number. So I started as a dividend investor. I remember one of my first dividend investments was Kraft Heinz. I saw that Warren Buffett had invested in Kraft Heinz and it kind of paid good dividend. Also, the stock is pretty undervalued because it went through a lot of accounting stuff. So, I invested in Kraft Heinz. Later on, I realized that given that I'm in my 30s, I have a little bit longer of a runway to invest in growth stocks, and hence came the investment in the growth in the growth stocks. So I've invested in the growth stocks as well, namely Tesla, Adobe, Lululemon, and such. The other investments that I really liked in the beginning were the just plain old investing in the index funds. Now, I think I'm going to revert back to index funds because of what's happening in the market. I have definitely been, taken to the cleaners on some of the stocks, and that's okay. I understand that, you win some bets, you lose some bets. But the thing that I realized in the market is this is a psychological game. No matter how sound your financial acumen is, when you see the money go out, you do get scared and you do want to take decisions that are probably not rational. And what I want to do is, hopefully, as I put these videos in and as I put an update of my portfolio going forward, I can, form a community of people who just want to stick with it through thick and thin, and and really look at wealth from that 10-20 years time frame, or 5 to 10 years time frame at least. In my case, I think I'm going to look at it from a 10 to 20 years time frame, and then see where I get. But I think if I can connect with people who are like-minded, that'll be awesome as well. Again, this is not an investment advice. I am not good in investments. I am not good in making investments. What I do is not based on any research, in the sense that I've not gone through a lot of 10Ks and books and this and that. I've not done much of that. What I've done is I've read, I've listened to YouTube videos, newspapers, what's happening in the market. Sometimes I'm as irrational as investing in a stock that everybody's talking about. I'll be the first one to say that I've done that mistake. Is it right? Absolutely not. Sometimes it has paid off, sometimes it has not. But again, as with anything, the probability of winning and losing both exist. So I would say that what I've done here is at some points like pretty irrational. So I definitely don't want anyone to follow my advice. The only thing that I would say, the two things that I want to say are more important than anything else, is that, I think investing in the market is more important than not investing. My wife, on the other hand, is in the corner that, you want to hoard cash. And I've actually taken some of her cash and put it out here. She doesn't know that yet. Hopefully we don't have to go and tell her. So I'm slowly replenishing the cash that I took from her. And then the second thing is, it's a matter of psychology. It's more of a matter of psychology. I would say this is 75-80%, mental strength. Either when the stock is going crazy up, you want to refrain from investing in it, or you want to invest in it because you think it's going to go up, and sort of, not waiting. And when the stock drops, or when the stock is dropping, realizing that, look, it's time to cut my losses and get out of it, invest in someplace else. Or, for example, if it's a good stock and you believe in the company, just holding on to it. It doesn't matter. Market fluctuations are going to come and go. It does not matter. So I am going to sort of, walk you through this journey. And I actually want to document this journey myself as well, because I want to see how far I go. That's all. I want to see how far I go. My goal is to hit $1 million in the stock market. So yeah, let's basically, I'm just going to walk you through my portfolio, and I plan to do this, on a regular basis, and go from there and tell you, the things that I've done. So this is my portfolio. As I said, I have a Robinhood portfolio, pretty plain vanilla stuff, nothing crazy. I have, again, I have been very lucky in the market, I would say, up until now. Look, again, I said to you, this can go down. This can all crash and burn tomorrow. So I have about $242,000 invested in the market right now. And if I, just do a simple math, and I go 242,000 times 0.6, which is 60%, I think my portfolio, in my mind, is $145,000. So I'm not, in my mind, I'm not thinking it's 242, 388. In my mind, it's 145. So I have some ways to go to that $1 million. I'm not counting all of 242, because you know what? It's so volatile out there. Who knows what's going to happen tomorrow? I really hope it doesn't go down below 40%, but if it does, it does. I don't need this money. I live a very frugal life. I'll be honest with you. I don't have a car. I don't have a bicycle. I live in a rented apartment. I walk to many places. Some of my friends will attest that if your house is 14, up to 14 miles away, I'll walk to your place. That's how I am. Not that I haven't bought a car because I am that stingy. It's just that my family situation is such that I don't think I need a car yet. And when I buy a car, I'll buy a car because I know I'll need it. Definitely not a status symbol for me. Okay, so in my portfolio, as you can see, I have basically all kinds of stocks out here. One of the stocks I'm really worried about is Tesla, because in my mind, I think it's basically on shaky grounds. You hear so many stories about Tesla, and my portfolio goes where Tesla goes, and the reason for that is that if you look at Tesla, currently it's 36.65% of my total portfolio, not by choice, obviously, but I am scared to sell it as well. There's going to be a big tax liability, and I also think there's an upside based on what I've heard on people say and talk about things. I've got about 82.5 shares. There's 251. I bought this stock. I have been accumulating this stock over the last 1.5 years, but my average cost is $251. So I do get scared about selling it. I am always worried, what's going to be the case. One cool thing I like to tell you is that I've done with Robinhood is that I bought this Robinhood, I don't know, membership or whatever it is, for $5 a month. And what it gives me are a few things. It kind of gives me like, a research report. I think it comes with the other version as well, but I pay $5. I pay $5 per month, and it kind of gives me a Morningstar, sort of, the fair value of the stock right now. And it kind of tells me what the fair value is. It's not something that I hold on to. But it gives me some kind of indication of what the fair market value of the stock is. So it's $700. As long as it stays above $251, I'm fine. But this is one stock I really get worried about, because there's so many things that can impact the value of the stock. There's obviously the actual financials, which at least have been moving in the right direction. I really think that Tesla's value of 1,076 is not warranted based on the growth rates and the current numbers. I really don't think so. I've actually gone through the 10K, skimmed through it a little bit. And I don't think this company should be valued at this price. I could be wrong. You know what? I'm going to hold on to it. It does not matter what it is. By the way, there's Elon Musk tweets that can easily, rock the party as far as Tesla is concerned. Things like buying Bitcoin and putting it on the balance sheet. A normal business would not do anything like that. Ford now coming out and saying, look, our truck is ready, can rock the boat for Tesla. So many things can happen. China, Xi Jinping could say something about, security and such, and this stock could go down. So every day that I look at my portfolio, I get worried about it. But you know what? It is what it is. I wish my other portfolio or other holdings grow to such a place where Tesla becomes smaller and smaller. But this is not what it is right now. I have other stocks as Microsoft, Apple, Adobe, VOO. These are my biggest holdings, of course. VOO is the S&P 500 index. I have about 37.62 shares. Again, love the dividend, love everything about this index so far. Again, market to crash tomorrow, and you know what, this might be a crazy place. I bought Lululemon. Let me tell you the story of how I bought Lululemon. This is the most amazing thing you're gonna hear from me in this video today. I remember. So first of all, Lululemon is now the CEO of Lululemon is the CEO of Sears Canada. When I used to work for Sears, and there were many times I presented to him, and I thought, like, for a company that really relies on image management, and Calvin McDonald, having known him, as an operator and also an image builder, I think that would be a good stock to buy. I still do not know what their sales are. I do not know what their margins are. One day I woke up and I looked at LinkedIn and there was news about Calvin McDonald, and somehow I found out that Lululemon is actually going to release earnings. I went in and bought 10 shares of Lululemon long time back. This was my biggest investment at the time. So bought it for $234, currently trading at $368. I know the stock had reached 400 something. So you know what, I'm sitting pretty at 57% return. Again, totally bought it based on knowing the product, but should have done more research there. I have Home Depot. In my role currently, I am working in a team that is Home Depot's competitor. So I go through Home Depot's earnings on a regular basis. I think it's an excellent company. It's a company that has a lot of moat, a lot of competitive advantage. I have that. I have Goldman Sachs. I love banks. Definitely, one of the reasons why I bought Goldman Sachs was because I remember I went for an interview at Goldman Sachs, and or not just an interview. Actually, I did the interview, the prelim stuff, and they invited me for a dinner. And I found out that they invited about 28 students from my MBA class. And knowing what I knew about some of the students out there, this was for the investment banking class. I was like, you know what, I'm not going to get through anyway. So I'm just going to enjoy my dinner. And trust me, I think I had like 3 servings of ice cream that day. I just had a good time. But I think it's a good bank. It's a great bank. Even if you look at the financials, if you look at the PE ratio, of Goldman Sachs, it's I think about 6.57. So that's pretty low. Now you can also look at price to book value. But again, those are these things are out there. Banks have been cheap since the the 2008 crash. I think, and again, like, I would say that Goldman Sachs recruitment does get the best of the best, and therefore they're good. And even when I was in investment banking, what I found was Goldman Sachs was always, any M&A we did, mostly, if not all the time, actually not always, mostly, if not all the time, was on the sell side of an M&A transaction. And that speaks for the strength of the bank itself. When you're on the sell side of an M&A transaction, you're going to get that business. When you're on the buy side, there's many companies buying. You may or may not get that business. So that tells you the strength of the bank. I've got Target out here. Basically, if you look at Target, it's one of my favorite holdings. I bought it long time back. It's trading at 231 today, and I bought it at 125 or something like that. Again, some of these investments I made them pre-COVID, so COVID had nothing to do with these investments. My favorite company, at least as of now, is AbbVie. Absolutely my favorite. Why? Because for whatever reason, I think it has actually done well financially. But I would never have thought that AbbVie would trade at $135.28 ever. I would have never thought, even my wildest imaginations. I used to put some money into this all the time, and my average cost for AbbVie is $96.71. My shares are 64. The current holding is 64. But the most important thing for me is the dividends that I get from AbbVie. It is unbelievably good. So let's just let me show you something. If you look at AbbVie, and if you go to dividends, these are the dividends that I've gotten from AbbVie over the last few quarters. $70, $66, $61, $55, so on and so forth. So basically, my first dividend came in 2020. This was again pre-pandemic. So I've been investing in this company before coronavirus came into our lovely lives and decided to stay. Anyways, I get $35. I got $35 in February of 2020. I have reached $70.20. This is a company that gives $1.30 in dividends. I think they have increased their dividends for the next year, $1.40 if I'm not mistaken. I have a sheet of paper where I track my dividends, and maybe I'll talk about that in one of my videos later on. But I keep a track of my dividends. How much have I invested? Where does my dividend lie? I know people come and tell me it's not the best allocation of taxes and all that kind of stuff. I really don't care. All I want is money that, when it comes in my pocket. If I'm paying taxes on a dividend, I know that money came into my pocket. So you know what, if it's the not the best allocation methodology for taxes and all that stuff, I really don't care. At this point in time, I care about the $1.30 that I get from AbbVie. So I love this company. I'm really happy that it's at $135. I have still been putting in a few dollars here and there, into AbbVie. I have Lucid. I have 54 shares of Lucid. Don't ask me why. I just have it. People said, get into it. So I got into it at $29. Do I think that they're worth $38 per share? Absolutely not. But you know what? We'll see. Some of the money that I invest is purely speculative. So the way I do it is, if I'm investing $100, I'm going to take the $100. Of the $100, $50 are going to go into, good growth companies. Good growth companies meaning Apple, Microsoft, Adobe, and such. The next maybe $40 or even $30 go into dividend making companies. Those may not grow that much, Pepsi, Coke, AbbVie, for example, but you know what? I'm going to get money out of it. I'm going to get a dividend out of it. But when you look at the last $10, I put into speculative stuff so that, if it grows, it grows. If it crashes, who gives a damn? So that's what it is. I've got Nvidia, Pepsi, Disney, AMD, Bank of America, my old company. Obviously, I think they're a great company, and I really do want to be invested in it. I do want to invest more, but right now the stock is just going crazy. Costco, I have about 3 shares, not much, but you know what? It's a pretty expensive stock. I love the company, and I think it's going to do well in the future as well. Casey, this is one from my investment banking days. These guys used to do their earning and I had to do their price charts. I hated it, so I just thought, and therefore I learned that this company is pretty solid. So I got a chance to go through their 10K, their offerings and stuff like that. This is a convenience store company. I've got about 2 shares of Google, almost a share of Shopify, Neo, Realty Income, again, one of my favorite stocks, pays dividend every month. I get about $25 from it every month. Coca-Cola, Johnson and Johnson, Morgan Stanley, again, one of those banks that I did not get in, even though I wanted to. But you know what? I think it's a good company. It's a good stock. Next Era Energy hires a lot of students from my MBA school, so I know about it. Asana, this is a company I think is going to be volatile over the next few years. The market was pricing it for much higher than what it was. I made about $600 from it, and I sold it. Now that the stock has dropped, I'm getting into it slowly but surely. CRM, which is Salesforce, Pfizer, TELUS. TELUS is a Canadian company. TELUS is a Canadian phone, like a telecom company. HC, I don't necessarily believe in it. I've just invested, 0.1 of a share just to keep a track and see where things are. Just started to invest in Ford, Estee Lauder, again, the same thing. I just want to track it. So not much invested there. GM, the same thing. PMY or Bristol Myers. This was a little bit. This was a little bit of a frustrating stock, but you know what? I have it. I think it again pays good dividends, so I'm going to keep it. I've got Facebook. I really want to grow my holding in Facebook right now at 7.61. I stole some shares as the market was crashing. Rivian, I have 1.31 shares. I think, again, don't know why I bought it, but I have it. So whatever. And I think this is a REIT, store capital. And now I'm going to start investing in Dow Jones Industrial Average as well. So this is my portfolio at this point in time. I also have, some money invested in Ethereum, Dogecoin, and Bitcoin, taking a hammering right now. So we'll see how that goes. I'm not going to sell it. It is what it is. One thing I want to mention, that one of my strategies has been to never go into a stock or any position like head first. Meaning, I never ever would go in and put like $5,000 into a stock or $2,000 into a stock. For that matter, even $1,000 into a stock. I absolutely hate it that I would put so much money into one holding, even if it's an index fund, in one go. What I do is I kind of go slow. And that's where Robinhood is absolutely amazing as far as fractional shares are concerned. I think since the fractional shares facility became available on Robinhood, my portfolio has gotten better, because now I'm not worried about I can go and acquire a fraction of a stock. I don't have to think about, if I don't have the total amount of money. So the way I look at it is, I used to spend a lot of money on coffee or tea, at these shops. And I realized that, if I cut out 2 coffees or 2 teas, these used to be about $10 a day. then I can go into Robinhood and practically buy 10 different companies for $1 each. And I've started to do that. So if you look at my history, and mostly if you look at orders, and even if you look at it today, yes, I invested some money into the market today. Like Ford Motor, I put in $50. Dow Jones Industrial, I want to grow my average there, $50. Asana, I put in $100. The stock price was really cheap, I think, relative to where it has been. It's not cheap at all compared to what the fundamentals of the company are. It's not cheap. I put $5 into the VOO, or the S&P 500. I have put in into AbbVie $5. Again, I love this company. I know it's a bit risky, but when you're putting in $5, it doesn't matter. Think of it this way. I probably was thinking, now it's become easier, but this is how I used to think about it. I'm going to take my $5 and I'm going to put it in AbbVie. You know what? What if that $5 become zero? Which it won't, because stock prices, only if a company goes bankrupt, stock prices go to zero, which is, again, the probability of that happening is pretty small, at least for now. Okay, the $5 gets halved. It becomes $2.50. But AbbVie pays a decent dividend. And based on the payout ratio that I've seen for AbbVie, based on the free cash flow that it's generating, I think the dividends are pretty solid. So if you look at the $5, and so I've invested that. If I cut it by half, who cares? If I had a coffee is gone, right? So I started to invest based on this mentality. I would go to the office, I'd pass the coffee shop, and I'd be like, look, I'm not gonna buy the coffee. Instead, I would go into the office, or I would actually put the $5 into a stock, or better yet, I would put $1 into 5 different stocks. And if you go back like sometime, like you can see that, right? AbbVie, again, I bought AbbVie for $1, NextEra Energy for $1, Pfizer for $2, Meta Platform for $2. You could argue that it's not it's not a what kind of strategy is that, but that's how I've done it, right? TELUS for $5, Pepsi for $5. And that allows me to invest pretty much every day, whether the market is good or the market is bad. I really don't care, right? Apple for $1.48. Alibaba, oh my God, Alibaba, man. That company I lost so much money on. It's a funny story. I had Alibaba. I bought Alibaba, and I think I bought it for 260 or 270, whatever the price was. And then the next day, Jack Ma was kidnapped. Like, how unlucky can you be? The next day, Jack Ma is like kidnapped by the Chinese guys, and that company has been like, I've been losing money on it. And every time I try to get into it, it surprises me. I lose more money. So I put $5 in here, and I think I sold it as well. Again, you'll see like 15, 20, 10, 5, 5. So I have been like growing my holdings pretty substantially. What happens is you don't notice this. You don't notice this immediately, but this adds up when you're doing this every single day. I think I've invested. I don't think I invested yesterday, but I've invested every single day, pretty much. Of the 365 days, I probably 365 days. The market is not open, but of the day that are open, I think I would have invested. I'm very confident to say I've invested on at least 80% of the open days, unless and until I was going somewhere doing something. This is, look at it, $2, $1, Tesla market buy for $1, Nvidia, Home Depot. And when I put $1, I'm not thinking, right? Like I'm not making a crazy investment at that point in time. Although I think I think the next thing I need to do is, the bull market, I think, is over. You're not going to put money into any stock it's going to grow. So now I need to sort of start consolidating. You're going to see that more and more my money is going to go into in index fund, like a Dow Jones or even a S&P 500. And none of this, like, buying like Rivian or whatever, right? So I personally think there is a lot of, like, value in putting in a small amount of money, but with a greater frequency. I think that really helps. It also helps you gauge the mood of the market, right? So if you invest, like, let's say $10,000 or $5,000 for that matter, and the market takes a downturn, right? You feel bad. I've invested $20, $10, lunch money. It doesn't matter. Fine. Market, do whatever the heck you want to do. So that's what I would say. So the goal is to sort of, keep on investing and see how this grows. I may be making the next video where I might be totally, this might be, going down, and that's fine. Again, on my side, I live frugally. I am, I'm more interested in growing this account than anything else right now. And for me, like, I feel like the job that I do, I want to do a good job on my actual day job. But I think whatever money I get from there, I want to kind of pump it into the market here. Not go crazy, because I definitely have a decent buffer of emergency funds and so on and so forth. So that's what I would say. Another way I'm saving is I get my company stock, and that stock is separate. I don't touch it. It's there. I don't want to look at it. It is what it is. I don't want to sell it. So that's my investment strategy. But what I want to do is, actually, I shouldn't call it strategy. It's my investment tactics, because frankly speaking, I think I should do a better job at evaluating the companies better. But this is where I am. It does require a lot of grit and determination to not sell, on the days when it goes down. But anyways, this is where I am. I hope you enjoyed this, and hope to see you soon. Anyways, happy new year. Time to make some resolutions. I've already slipped on 2-3 of mine, but it is what it is. As long as I keep doing a good job here, I think I'm going to be okay. Take care. Bye-bye.